Welcome. It's 30 minutes to noontime and it's Business 360. My name is Blyden Okem. In Business 360 today, we'll look at some of the big stories in the world of business. We'll look at the markets, and one important talking point would be the OPEC Plus cuts. The OPEC Plus cuts would be the biggest concern in the world of business. The OPEC Plus oil production cuts can absolutely continue past the first quarter if needed, the Saudi Energy Minister Prince Abdulaziz bin Salman said, as he pledged the cuts would be delivered in full. The supply reduction announced last week of more than 2 million barrels a day, about half of which are coming from Saudi Arabia, will only be withdrawn after consideration of market conditions and using a phase-in approach, he said. The Saudi Energy Minister Prince Abdulaziz bin Salman spoke in Riyadh. Let's find out more regarding this.
Apart from, I honestly believe that the best decision we made was to delay the meeting. I honestly believe that the delivery of the 2.2 will happen. I honestly believe that that 2.2 million will overcome even the usual inventory build that usually happen in the first quarter. I also believe that we wanted, it's almost we were working with a checklist, and that last item, that checklist, apart from the volume and the commitment and what have you, is to give the market a signal that these 2.2 million are not going to come the 1st of April. Simply because we wanted to market to know that there will be a phased-in approach, and since we don't know what would be the market situation, be it in January, February, March, we wanted to be careful about what language we use by saying it will be phased out or gradually.
In Africa, the African Development Bank Group has unveiled its proposed $1 billion initiative aimed at offering insurance coverage to over 40 million farmers across Africa, protecting them from the severe impact of climate change. 97% of farmers in Africa do not have agricultural insurance. The implementation of the facility hinges significantly on partnerships such as the World Food Programme to ensure the delivery of services to clients. Still in Africa. By 2035, Africa exports are set to experience a remarkable surge, approaching nearly $1 trillion. The driving force behind this economic milestone is the African Continental Free Trade Area, a collaborative effort encompassing 54 markets poised to augment exports by an additional 29%. According to the Future of Trade 2023 report, robust intra-regional trade growth is anticipated for West and East Africa, with significant potentials in agricultural value chains. Despite the geographical distance, Southern and West Africa's trade with East Asia is expected to surpass $100 billion by 2035. Still in Africa. A Chinese national, Aisha Hang, was sentenced to 4 years in jail for illegal gold mining in Ghana. Aisha Hang's lawyer, Hope Agbadu, revealed that the Chinese woman received a 4-year sentence and a fine of 48,000 Ghanaian cedis, at equivalent of $4,000, for establishing an illegal mining rig in the West African country. Environmental concerns persist as illegal gold mining remains a means of subsistence for many in Ghana. In Kenya, small and medium-sized Kenyan businesses with optimistic prospects could potentially receive aid from the World Bank via a program initiated by the global lender budgeted at $50 million, an equivalent of 7.7 billion shilling. The feasibility of some Kenyan business models will be assessed, and those with the most scalable ideas will be selected for the World Bank's grants. 23 outstanding businesses are identified for potential grants. The program commits to empowering female-led enterprises, aiming for 24% representation. Some like good news in Kenya for many SMEs. Meanwhile, on Monday, the United States welcomed Angola's official participation in the Artemis Accords on space exploration, as announced by the State Department. Angola became the 33rd country to sign the Artemis Accord. The accord is a practical set of principles to guide space exploration cooperation among nations. More countries are expected to sign the Artemis Accord in the months and years ahead. Now a little close back home in Nigeria. Spain has emerged as the country's top export destination, accounting for a remarkable 12.31% of total exports, valued at 1.27 trillion naira. This followed by India with 1.02 billion naira, a 9.81%, Netherlands with 988.66 billion naira, a 9.56%, Indonesia with 758.59 billion naira, that is 7.33%, and France with 720.45 billion naira, equaling 6.96% of total exports. These 5 countries collectively accounted for 45.98% of Nigeria's total exports, demonstrating the country's growing presence in diverse global markets. These developments are according to the Foreign Trade Report for the 3rd quarter of 2023, released by the National Bureau of Statistics on Monday. Meanwhile, China has maintained its status as Nigeria's top import partner in the 3rd quarter of 2023, accounting for a significant 23.33% of total imports. That's huge. Still in Nigeria. The Nigerian Upstream Petroleum and Regulatory Commission has disclosed that President Bola Tinubu's administration plans to revoke unused oil exploration leases. The federal government would take back leases from companies who have not been able to carry out any exploration activities on them since they were granted the leases. This was made known by the Chief Executive Officer of Nigeria's Upstream Petroleum Regulatory Commission, Benga Komolafe, on Monday. Komolafe said that only companies with viable technical and financial backup would get to keep their leases. Meanwhile, the Conference of Nigerian Intellectuals in the United States has alleged human rights violation in the ongoing trial of the former governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, in Nigeria. The group led by its president, Dr. Philip Idris, in a statement decried the handling of the case against former CBN governor by the Economics and Financial Crimes Commission. The group described Emefiele's ongoing detention as illegal. Emefiele's trial recently commenced and commenced in the High Court of the Federal Capital Territory in Abuja, with witnesses reportedly absolving him of wrongdoing in the award of 1.2 billion naira vehicle supply contracts during his CBN tenure. Quoting Article 9 of the United Nations Human Rights, Idris said, "No one shall be subjected to arbitrary arrest, detention, or exile." Now we'll go on a quick break. When we return, we'll look at global economic standings as China is likely to match US GDP per capita. Don't go anywhere. When we return, it would be Welcome back. It is Business 360, and my name is Blyden Okem. And now to global economy, looking at economic standings, and afterwards we'll also look at the markets. East Asian countries have been catching up and even surpassing US GDP per capita in recent years. Levels of GDP per capita are obtained by dividing GDP at current market prices by the population of the country. South Korea, for example, is already approaching US GDP per capita levels. Given China's 40-year record of rapid GDP growth, a likely slowly declining population, and central place in Asia, by far the world's fastest growing region, there seems little reason to suppose it won't one day rival the US in terms of wealth per capita. While talking about wealth per capita, let's move to the chart indicating East Africa GDP per capita according to estimates shown for 2023. The chart. According to the charts, with estimates shown for 2023, East Africa GDP per capita, and looking at how it's going in the direction of the US GDP per capita. Singapore up there has gotten more in terms of GDP per capita compared to the US. The US indicates a vertical red line aligning here. Well, other countries like Taiwan also are doing quite well, approaching the United States GDP per capita, which stands about $67 per capita, indirectly meaning per head based on GDP growth in the country. It's worth about $67,000 and $68,000 in the US. But other countries in Asia are approaching the GDP per capita level of the United States. But countries like Singapore have even surpassed the GDP per capita level of the United States. According to per capita GDP data, Luxembourg, one of the smallest countries in the EU, has a population of 634,000 and is the richest country in the world's ranking with a per capita GDP of nearly $130,000. That's the story. So it's not all about the GDP generated in the country, it's also in tandem with the population of that country. For example, look at Nigeria's case, 430-something thousand GDP in the country generated per annum, but a population 200 million people. Still concerning. Therefore, the money doesn't get to go around. Meanwhile, the Reserve Bank of Australia maintained its cash rate at 4.35% during its final meeting of the year, as widely expected. Tuesday's move was in line with market expectations, coming after an action by the central bank in November to raise borrowing costs by 25 basis points, while allowing time to assess the impact of previous rate hikes on demand, inflation, and the labor market. The board said that progress in bringing inflation back to the target range of 2 to 3% was slower than earlier forecast, with underlying inflation higher than expected amid rising services costs. Policymakers reiterated that whether further tightening is needed will depend upon the data and the evolving assessment of risks. Now looking at consumer price index in South Korea. The consumer price index in South Korea eased to 3.3% year-on-year in November 2023 from 3.8% in the prior month. Inflation is a decrease in the purchasing power of money, reflected in a general increase in the prices of goods and services in an economy. The November figure was the lowest since July, while snapping a third straight month of acceleration in the annual inflation due to mild slowdown in cost of fresh food items as well as fuel prices. The Bank of Korea kept interest rates steady at 3.5% last year at its final policy meeting of the year and signaled it may need to keep interest rate higher for longer to head off persistent inflation risks. On a monthly basis, consumer prices fell 0.6%, beating market expectations of 0.15% drop, and after rising 0.3% in October, it marked the sharpest decline in consumer prices since October 2020. And now to the charts indicating South Korea's inflation rates. The charts this morning. According to statistics coming from South Korea, by January 2023, inflation stood at 5.2%, but began to slow down, indicating improvements in the economy and the cost of commodities slowing down, and the value of the South Korean won also becoming stronger. By April 2023, inflation stood at 3.7% and even dropped further to 2.3% by July 2023, before rising slightly to 3.4% and 3.8% in October, and currently at 3.3% in November, to 48.4% in November 2023 from a 5-month low of 47.9% in the previous month, indicating a slowdown there. It was a 36th consecutive month of contraction in private sector activity, but the least severe since August, as both output and new orders fell. but more slowly than in the previous month. In addition, there was a slight decline in employment. Meanwhile, non-oil businesses cut their purchasing activity, which was the slowest since February of last year, mostly due to lower demand and cost pressures. On the price front, input costs significantly increased, primarily influenced by the weak currency and supplier shortages in Egypt. Now to Nigeria, looking at trade balance in Nigeria. Nigeria posted a large trade surplus of 1,438.4 billion naira in September 2023, compared to a deficit of 7.2 billion naira in the corresponding month of the previous year. This was the largest trade surplus since June 2023, largely due to a strong depreciation of the naira. Exports jumped 115% year-on-year to an all-time high of 3,867 billion naira, mainly boosted by shipment of crude oil at a positive 132%, agricultural goods a positive 123.2%, solid minerals a positive 76.4%, and other oil products a positive 69.2%. Meanwhile, imports surged 34.5% to 2,429 billion naira, mostly due to higher acquisition of other oil products at a positive 85.4%, solid minerals positive 76.1%, and manufactured products positive 21.2%. Considering the third quarter of 2023, exports increased by 60.78% and imports soared 47.7%, leading to a trade surplus of 1,888.92 billion naira. Quite an improvement there. And now let's move to the markets, the commodity markets, beginning with the energy sector. WTI crude futures traded above $73 per barrel today, in a likely technical bounce, while investors continue to assess the global supply and demand outlook. Oil prices lost more than 6% over the past 3 sessions, amid doubt that supply cuts by OPEC Plus would have a significant impact, and as softening data in major economies took fears of weaker energy demand. Last week, several OPEC Plus members, including Saudi Arabia, UAE, and Kuwait, announced additional voluntary cuts to the total of 2.2 million barrels per day, while other members have yet to make their pledges. Saudi Arabia's energy minister spoke this morning, as we showed earlier,